Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Apple report for Wednesday, March 8th, 2023. Before we jump into all the charts, I just want to ask you to please click like and subscribe and share the content, if you would, with friends and colleagues. And if you would, check us out at wickedstocks.com, where we offer daily Triple Q, daily SPY analysis, S&P 500, NASDAQ 100, weekly TLT, the long bond ETF, 2 individual stock picks every week. In fact, on Tuesday, we put out a 10-minute video on advanced micro devices, showing significant overhead resistance in that stock. On Thursday, I think we're slated for Etsy, so forth and so on. These are markets and videos that you never, I should say, rarely see on YouTube. So check us out at wickedstocks.com. So let's talk big picture, work our way into the day. In early January, we came off of this targeted long-term support in the 120s, at the time mentioning how the 170 channel top may actually be in reach later in 23. And so on the way up, we had a meaningful settlement above 2 key areas. The most recent, about a month ago, above 141.18, this former long-term channel top. It had been considered a target until we had this significant rally that played out late last week and into early this. And so here we are. Let's see, what image would I like to show you? I'm going to show you this one first, and that is to say that we still have this former speed line and channel top, both in the 151 handle. It's sort of pick your spot. We settled right in the middle of it, so I can't really go with a sell signal into today's trade, into Wednesday, unless we happen to open clearly below 151.07, which would be a gap lower opening below Tuesday's 151.13 low. That in itself a sign of weakness. If we do open below 151.07, for instance, 156.39 is in reach today. On the way down, 158.64, we should get a decent bounce there, maybe for the day. But, I think if we break, especially open below 151.07, you should allow for the 146 handle by the closing bell. 146.39 is part of a range now down to 146.35. This rising two-thirds speed line that managed to actually capture last week's low has been bumped up to a 3-star support, able to absorb selling through next week. And from there, we can turn back up, possibly to 159.86 within 2 to 3 weeks of testing 146.35. Now, if we were to close below 146.35, then yes, we are back to expecting this 141.18 channel top within a matter of days, where we could bottom out not only into April, but even through the second quarter, and above which we maintain a 3 to 5 month buy signal, anticipating 172.49 as a 3 to 5 month target. We are 1 full month into that right now, and so 3 to 5 months certainly still in the realm of possibility on that buy signal. That pretty much covers the downside. Let me talk the trading itself. Once again, day traders, 3 to 5 day swing traders, even 1 to 2 week position traders above 151.07 allows 159.86 maybe by the end of next week. On an intraday basis, above 151.07, and ideally you want to see the market then push easily through 151.88, 154.02 in reach, and that is that high area. Actually, it is the high from Tuesday. It is also an upward pivot point, so it's also similar to the low of the high from Monday. The settlement price, they're all in that vicinity. Hi, if you enjoy watching our daily Apple report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. So 154.02 is our intraday upside pivot point. It is in reach today above 151 handle support. So the day traders can buy the 151 handle, assuming we open at or above this area. 154.02 could be a profit-taking zone. Aggressive day traders could short 154.02, anticipating a possible fall back into the 151 handle on an intraday basis. If we push through 154.02, 157.50 is attainable by the closing bell. but I do think it probably would be a settlement today above 154.02 that would yield 157.50 tomorrow. And 157.50 is nothing more than this October high that we came very close to testing a month ago. 157.38 was that high. This is 157.50. So that is an area that can contain session strength. But as I mentioned, a moment ago, holding above this 151 handle support will keep the 159 handle in reach over the next week, two at the most, and that is this 159.86 long-term descending two-thirds speed line in combination with a 5/8 Fibonacci, both A, B points. This area, 159.86 to 160.49, if tested, say between now and the end of next week, and once again, it is in reach over the next week or so above 151.07. The 159.86 to 160.49 area is a profit-taking zone if you happen to hold out a long position from 151.07. You could also consider setting a short here on a weekly basis, possibly into April trade. We could fall off from here for a matter of several weeks, perhaps, possibly back into the 141 handle within a month or two of testing 160.49. That's one of the reasons I've got 172 as a 3 to 5 month objective above 141.18, because it allows all this play to take place between the low 140s and the low 160s as we move through the second quarter. Finally, it would be a settlement above 160.49. If you sold that area, if you bought, say, 140 puts after testing 160.49 in anticipation of the low 140s, well, you want to liquidate those, in my opinion. If we close above 160.49, then we're 2 to 3 weeks away from reaching 172.49. So, so for options traders, I could back up just a little bit. I'll nuance this just a tad. Holding above 151 even, you could reach right now for 160 out of the money calls that don't expire for at least a couple of weeks. If we close above that 160 area, as I showed here, 160.49, then you want to reach for 172 calls that don't expire for at least several weeks. I'd mentioned how after having closed above this, you could have reached for 170 out of the money calls that don't expire for at least 6 months, maybe a year out, and that is still a play that is in effect. Let's talk downside today, that if we do, once again, break or open below 151.07, 148.64 in reach, potentially 146.39 on an intraday basis, which is part of a zone of meaningful support that can absorb selling through next week, possibly into April, and we could come off of this nicely. So this would be, if you were short from 151.07, which is not on this chart, it's on this chart. If you're short with a break or open below 151.07, holding out for the 146 handle, that would be your profit-taking area. And if you're an aggressive trader, you could then go long in the 146 handle. I would consider going long at up to 159, 160. So down here, you could buy 160 out of the money calls that don't expire for at least a few weeks. I'd go a couple of months out on that. And finally, as I said earlier, closing below 146.35, just a few days away from retesting this 141.18 channel top, where we could bottom out through the second quarter and turn higher from there. I don't think that there's really anything else that needs to be said beyond what already has been. I think I'm just going to leave it at that for Wednesday's Daily Apple Report. Please click like and subscribe. Check us out at wickedstocks.com. I'll be back tomorrow with Thursday's Apple Report. You have a great evening.